Since last January of 2021, Cathie Wood's flagship Ark Innovation Fund has fallen from $156 a share down to today of $71 a share. That's a drop of over 54% in just 1 year, and yet actually 43% of that has come in the last 2 months alone. The importance of the next couple months for the stock market should not be underestimated. And if you own Ark Invest funds or own similar tech companies to the ones that they should be holding, well then you should definitely watch this video today. But before we jump into it, if you like the Cathie Wood coverage, make sure you guys give me a like and subscribe down below if you want to see more financial content just like this. Cathie Wood has been notoriously stern on the idea that deflation is the direction that the American economy is headed. This, however, has proven dramatically incorrect as inflation continues to drive higher and higher, actually hitting a record of 7% annual inflation. A number so high we haven't seen that since 1982. However, signs might be showing that this is actually peak inflation and we might be turning around, as some countries actually see slower economic growth. Most notably, China actually just cut their interest rates to counteract a deflationary environment right now as they're starting to see economic slowdown. This is the first interest rate hike that China has done since April of 2020. But now if Cathie Wood is proven correct and we are headed into a deflationary environment, the actual bet on a deflationary environment is a very interesting one. Cathie Wood is buying the fastest growing companies on the market and putting aside standard valuations to try to find the next Tesla, Netflix, or even PayPal. Companies like Coinbase, Zoom, Teladoc, or even Roku. All of these companies growing exponentially in the customer base wise and revenue wise, but still struggle in the profit department as well. They're still seeing a lot of growing pains. Some investors are worried that the same problems that were plaguing the stock market back in the dot-com bubble could be the same things that we are seeing today. There were copious amounts of companies that were IPOing onto the market that had no real way of making any meaningful profit. Companies like Pets.com, eToys.com, or even Webvan. All of these going public in the late 1990s, gaining huge popular investor belief, then to later only go bankrupt as they could not find customers. Cathie Wood, however, shines some light on some amazing points that she's been thinking about in her latest series, In the Know. She talks about in the most recent episode of In the Know how she believes that a lot of those companies back then were built on a lot of hopes and dreams. But if we use Zoom as an example today, they have real customers. And although they're not growing at the 200% year-over-year rates as they did during the pandemic, they are still growing, let's say 20% now, on top of the 200% that they did before, so still growing very meaningfully. Although the valuations might be high, they have significantly dropped off from where they once were just a year ago. And when I mean high, I mean extremely high. We're not talking about 20% differences here, we're talking about a 10x difference. Whenever we look at the price to sales ratio of Zoom, for example, you see that back just a year ago they had 124 times price to sales ratio, where today they're only holding it at around 12. A number that a lot of investors could wrap their head around, except now this is whenever everyone is panicking. It doesn't really make any sense to me. I personally really look to these two very important Warren Buffett quotes, and I'm sure Cathie Wood is thinking the same thing. Like Warren Buffett always says, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. Meaning very simply, okay, the stocks and the companies are not the same thing. So whenever a stock is going down, crashing down, it doesn't necessarily mean that Zoom as a business is crashing down. And so the companies can still continue to grow on and on and on, even though investor sentiment starts to change. This is why Cathie Wood is so calm during these times, is because she knows that yes, investor sentiment can change in the short term, but knowing the long term, as long as these companies that she's holding continue to grow, it will soon become a weighing machine, and all the profits that these companies could bring in the long term, like the way Netflix has turned into a successful business, or PayPal, that the valuations will turn into very stomachable valuations, and she will have been a long-term investor by that point. That Warren Buffett quote sums up how Cathie Wood is looking in the long term. But in the short term, today is now where my second Warren Buffett quote comes in, and that's the fact that be greedy when others are fearful, and fearful when others are greedy. This is not the time to sell and abandon Ark, as the actual valuations of these companies have dropped down significantly, taking away all that risk. If you were worried about them crashing, you're way too late. It may not have been great timing on your part, but that's another Warren Buffett quote too. You shouldn't time the market. Time in the market's better than timing the market. I know I'm not smart enough to do so, so all I can do is double down. If you liked Ark Innovation Fund at $100 a share, you should love it at $70 a share. Because the businesses, yes, they're cheaper, but they've obviously not changed in the way they do business. This is, however, only if you have the stomach to wait a while. Crazy things can happen in these public markets, and you should be ready and waiting to hold for the next 12 to 18 months if it stays flat down at these levels. Now, it doesn't have to be that long. It could actually be just 1 week till these markets recover. But the idea that we can't tell the difference between if it's going to be a week or a year is the idea why you should be comfortable with both outcomes. If you think you have a similar investing style to Cathie Wood, you might want to check out her top 8 positions that she's buying right now. But until next time, guys, make sure you guys like and subscribe down below if you want to see more financial content just like this.